In uncertain times, people look for one thing: safety. And when inflation rises, currencies weaken and markets wobble. Three names always dominate the conversation: gold, Bitcoin, real estate. But in 2026, with interest rates finally easing, global debt hitting record highs, and the digital economy booming, which one will truly outperform the others? In this video, we'll break down the pros, cons, and future outlook for each of these giants to help you decide where your money actually belongs in 2026. For decades, people trusted banks. You'd save, earn a small interest, and feel safe. But since the 2020s, that equation changed. Inflation eroded savings faster than interest could grow. Governments printed trillions. And people started asking, if money loses value every year, where should I store mine? That question gave rise to three modern safe havens: gold, Bitcoin, and real estate. Each promises safety. Each has risk. But only one will dominate the post-2025 landscape. Let's start with the oldest: gold. Gold has survived every empire, war, and crash. It doesn't rust. It doesn't default. And it doesn't need Wi-Fi. In 2024, gold hit record highs, surpassing $2,500 per ounce, as investors fled to safety during geopolitical tensions and U.S. debt fears. Analysts now predict it could reach $3,000 by mid-2026, especially if the Federal Reserve begins cutting rates. Why? Because gold thrives when real interest rates fall. When money in the bank yields less, people prefer hard assets, and gold shines brightest in those times. But gold isn't perfect. It doesn't generate income. It just sits there, and while it protects purchasing power, it rarely multiplies it. In other words, gold preserves wealth. It doesn't grow it. That's why younger investors started shifting toward new forms of digital gold. Bitcoin began as an experiment, an alternative to government money. But in just 15 years, it's evolved into a trillion-dollar asset class. With a fixed supply of 21 million coins, Bitcoin is designed to be scarce, something gold took nature billions of years to achieve. And after its 2024 halving, Bitcoin's supply inflation dropped below gold's, making it mathematically even rarer. Now, with institutional adoption rising, ETFs approved, and global usage expanding, Bitcoin is no longer a fringe idea. It's becoming mainstream finance. In 2025, major financial firms like BlackRock, Fidelity, and Vanguard increased exposure to Bitcoin-linked funds. Countries like El Salvador and the UAE are even integrating it into their payment systems. So can Bitcoin outperform gold? Historically, yes. Between 2018 and 2024, Bitcoin returned over 1,000%, while gold returned less than 60%. But Bitcoin's biggest problem isn't potential, it's volatility. Prices swing 20 to 30% in a week. And when fear hits markets, Bitcoin often drops faster than it rises. It's high risk, high reward. If gold is the tortoise, Bitcoin is the rocket. Powerful but unpredictable. And then there's real estate, the favorite of millionaires and families alike. Unlike gold or Bitcoin, real estate gives you something tangible: land, walls, rental income. Historically, it's been one of the most consistent wealth creators. But 2025 changed the game. After years of high interest rates, mortgage costs peaked. Many markets from Canada to Dubai to Australia started cooling. Now, with expected rate cuts in 2026, real estate might be poised for a rebound. Lower rates mean cheaper borrowing, which often triggers price growth again. However, the market isn't uniform. While luxury and coastal properties are showing slow recovery, rental demand and commercial real estate remain volatile post-pandemic. Add to that global housing shortages and urban migration, and you have both opportunity and risk. Real estate provides stability and passive income, but it's illiquid and costly to enter. You can't sell a wall overnight like you can sell gold or crypto. Still, for many, it's not just an investment, it's security, legacy, and leverage. Let's put them head to head. Feature gold, Bitcoin, real estate. Liquidity high, very high low. Volatility low, very high medium returns, last 5 years, plus 60%, plus 1,000%, plus 35%. AVG global inflation hedge, strong long-term moderate accessibility, easy difficult income generation, none rental capital gains, storage costs, low high. Regulation risk, low medium high. So which is best? It depends on your goals and risk tolerance. If you value stability and preservation, gold remains king. If you seek growth and disruption, Bitcoin might outperform. If you want income and leverage, real estate delivers long-term wealth. But the smartest investors aren't choosing one. They're diversifying across all three. According to Goldman Sachs and JP Morgan forecasts, gold could test $3,000 Oz as central banks increase buying. Bitcoin could reach $150,000 if ETFs and institutional demand continue rising. Real estate might rebound 10 to 15% globally if interest rates ease and supply remains tight. But they all share one common theme. Inflation and liquidity will define 2026. When central banks print more money or cut rates, asset prices rise. And all three, gold, Bitcoin, and real estate, tend to benefit. Beyond numbers, there's a deeper question. What do you trust? Gold represents trust in history. Bitcoin represents trust in technology. Real estate represents trust in something you can see and touch. The future of money might not belong to one asset, but to the idea of decentralizing trust itself. Owning a mix of hard assets, physical, digital, and tangible, could be the ultimate defense in an uncertain world. So, what's the smartest investment for 2026? The answer isn't one word, it's balance. In a world where inflation, technology, and geopolitics constantly shift the ground beneath us, smart investors stay diversified and adaptable. Maybe you'll hold a bit of gold for security, some Bitcoin for growth, and real estate for legacy. Because wealth isn't built on predictions, it's built on preparation. The best investment for 2026, the one that helps you sleep peacefully at night, no matter what the markets do. If you found this video insightful, hit that like button, subscribe to Vectorlog, and share it with someone planning their 2026 investments. Until next time, stay curious, stay informed, and invest wisely.